You know what really kills most traders? It's not some secret, complex strategy they're missing. Nope. It's emotion. Fear? It makes you sell way too early. And greed? Greed makes you hold on for dear life, long after you should have gotten out. But what if you could trade like a machine? How do you actually do that? Well, let's break it down.
You know, this quote from Sun Tzu, it's pretty much the entire game plan right here. Winning in the market isn't about those flashy split-second calls you see in movies. Nah. It's all about the prep work, the thinking you do before you ever risk a single dollar.
And that's the real enemy, isn't it? It's not the market, it's what's going on in our own heads. The second real money is on the line, our brains just get hijacked by fear, greed, and panic. And let me tell you, those feelings are absolutely terrible co-pilots for making financial decisions. They are the single biggest reason most people just can't find consistency.
All right, so here's our game plan. First, we're going to dive deep into that emotional trading trap. Then I'll show you the solution, the mechanical system. After that, we'll talk about how to actually put it into practice, some common traps you really need to avoid, and we'll wrap it up with the right kind of mindset to make it all work.
Okay, Section 1. Let's really get to know the enemy we're up against here, our own psychology.
So check this out. This is a killer insight from Richard Wiseman's book. He basically says, look, you could have the best, most profitable trading system in the world. But the hardest part? It's just listening to it. It's our own human nature to second-guess things, to get scared, to get a little too greedy. And that impulse just completely steamrolls the very logic that's supposed to protect us. And this is where things get really destructive. You've probably heard of revenge trading, right? That's when you take a loss, you feel that sting, and you immediately jump back in to try and win it back. But spoiler alert, that almost always ends in disaster. You just lose more. A system, on the other hand, it doesn't care. It doesn't have feelings. It just waits patiently for the next valid signal. Getting rid of that emotional trigger, that's the whole game.
So, if our emotions are the problem, what's the fix? Well, it's taking us out of the equation. It's using what's called a mechanical system.
So here's the official definition, but let's just cut to the chase. A mechanical trading system is just a set of rules. That's it. Rules you create ahead of time for when to get in, when to get out, and how much to risk. And the most important part is this phrase right here, independent of an individual trader's discretion. That means your gut feeling doesn't matter. Your mood doesn't matter. What you saw in the news this morning, totally irrelevant. Only the rules matter. The best way to think about this is like a pilot's pre-flight checklist, right? Pilots don't just kick the tires and say, yeah, feels good today. No way. They follow the list every single time. And it's the exact same idea here. You define everything, and I mean everything, before the market even opens. If this specific thing happens, I buy. If that specific thing happens, I sell. Period. There are no gut feelings on the checklist. And here's a super simple visual example of what I mean. See this chart? You've got the price, and you've got this line, which is the 200-day moving average. A rule in your system could be dead simple. If the price closes above the line, I buy. If it closes below the line, I sell. See? It's not a guess. It's not an opinion. It's a yes or no question based on math. It completely removes you and your emotions from the decision-making process. Okay, I think you get the concept. It's powerful. But how do you actually do this? Well, there are really two main ways to go about it. You can basically choose one of two paths. You can be the disciplined human who follows a strict set of rules, or you can let an actual machine, an algorithmic bot, do it for you. Both can lead to emotionless trading, but they have some pretty different pros and cons. So with the manual rules approach, you're still at the controls. You've got your written checklist right in front of you, and you're the one who physically clicks buy or sell, but only when the checklist tells you to. For example, a rule might be, every single Monday at 10 a.m., I sell a specific iron Condor on the SPX. I set my profit target to 50% and my stop loss to 100%. No thought required, just pure execution. The big downside, of course, is that you're still human, and that temptation to bend the rules, it's always lurking. Now, the other path is algorithmic trading. This is where you actually code your rules into software. This is true emotionlessness, because a bot is doing all the work. The problem? Well, you need to know how to code, and you're always running the risk of a tech glitch. All right, so this whole rules-based system thing sounds pretty great, maybe even foolproof, but it's not. There are definitely some classic mistakes that trip people up when they're building and using these. So let's talk about the big ones. Right. So you've got your rules, you're ready to go. What could possibly go wrong? Well, a few things. Building the system is just half the battle. Avoiding the hidden traps is the other half. And the most common one can get even the pros. Okay, according to our source from Intrinio, here are the 5 big traps. You've got stuff like using low-quality data, which is just, garbage in, garbage out. Then there's ignoring real-world costs, like slippage. But honestly, the number one biggest mistake, especially for beginners, is this first one, over-optimizing, which has a fancier name, curve fitting. We need to define that one because it's super important.
So what is curve fitting? It's when you basically design a perfect strategy for the past. You tweak and tune your rules so they would have absolutely crushed it on last year's market data. The problem is, the future never looks exactly like the past. A system that's been fine-tuned to perfection for what has happened is usually way too fragile to handle what will happen. The goal isn't a perfect system. It's a robust one. And that brings us to our last section, which is honestly the most important piece of the puzzle, the mindset. Because this isn't just about code and checklists, it's about a complete shift in how you look at the market.
And I really want you to let this one sink in. Emotionless trading is not about becoming a robot. It's about doing your heavy thinking on Sunday when you're calm and the markets are closed so that you don't have to panic think on a Tuesday. You use your intelligence and creativity to build a solid, rational plan. And then, during the week, your only job is to be the disciplined person who executes that plan.
Honestly, it all just boils down to this one simple mantra. Build the plan, then trust the plan. That's it. All the hard work is done in the preparation. Remember Sun Tzu? The battle is won before it is ever fought.
Hey, if this breakdown was helpful and you want more like it, make sure you subscribe. We're all about leveling up your brain here at the NoteMan.
So I'll leave you with this to chew on. Your system, it's your shield. It protects you from the emotional chaos of the market. So if you were going to build your shield, what would be the very first rule you'd write down for it?